Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. I am so happy that you are here. It is great to be back in the studio. I have been working on a few new projects over the last several months. That's why we have not been producing these videos. However, I am back and we are going to have a proper gold price update. That is going to remain the focus of this channel on the most clear form of technical analysis focused on the monetary precious metals that is available today. That is the focus of this channel. That said, I will be expanding into some other topics over the coming months. And I do want to let you know just briefly about what I've been doing in the background over the last few months. A few things, really. First, we launched a new business. It is called Elite Private Placements. I will talk more about that later, but just briefly, that is a service for higher net worth investors who want to invest in the precious metal sector, but at more favored terms than, let's say, just buying in the open market. So more on that later. What else have I been doing here? You know, guys, I speak on a number of other topics. One of those, outside of the precious metals and the financial markets, one of those is I speak at some events on my experiences in Iraq and Afghanistan. And so I have been doing a few talks on that over the last couple months. And over the coming weeks, I will post some links to some of those talks for those of you who are curious to see about that. And there is a link. There is a connection between a lot of the themes that I talk about here with respect to precious metals and, let's say, the wars, for example. What is the link? It is about throwing off those who attempt to suppress our potential as human beings. If I could even go so far as to say, as creatures with divine sparks in us. You know, the precious metals are a way of throwing off the central bankers who try to steal our power and our wealth in the physical sense, right? And so some of those other topics, the never-ending wars, are another way that governments or those who would dare to try to take power into their hands try to suppress populations through two ways. Of course, through inflating the currency, again, to pay for the wars, and then by blowing up the products of that inflation on the other side of the planet and thereby suppressing the totality of our potential as human beings. So these are some of the things that I talk about. This is really the topic that I'm most passionate about. It's bringing all of this together. In this update, we will get back and focus on the gold price. As I said, that is going to remain the focus of this channel, even as we expand into other topics here coming up. Make sure to hit the big red subscribe button and the little bell icon so that you will know when these videos are posted for free on YouTube. And I do want to let you know it's really important that you hit that bell icon because the schedule here is going to become more variable. I'm not going to be posting every week. I'm not even going to say every other week. Sometimes I'm going to post multiple videos in 1 week. Sometimes I might not post for several weeks in a row. It's going to depend what's happening on the markets, how much time I have with the other projects that I'm taking on, etc. So I want to make sure that you guys know when these free videos are posted, all right? So getting into where are we in the gold market? I'm really excited by what I'm seeing here over just the last couple of days. And let's talk about the backdrop for that. So this is a little summary article from CNBC that was published just yesterday, just on Wednesday, on the highest consumer price inflation in over 30 years. So we're now going back to January 1991 is the last time that we've seen anything like this, a 5.4% gain in the overall inflation level. Another way to state that is a 5.4% devaluation of the currency. Another way to say that is a 5.4% theft of your labor and your energy as a human being. your family's energy, your stored savings, theft, outright theft. And so this is serious stuff that we're talking about here. However, it's not all doom and gloom because I wouldn't be here otherwise. And the bottom line is, when individuals are trying to take something from you, what does that mean? It means you have it to start with. You have the power to start with. And so I think we have to keep this in our minds at all times. 5.4%, right? Now, here's the key. So high inflation, highest in over 30 years. Over the last couple of months, we have seen this weird dynamic where every time the market has been talking about high inflation, you would see gold and silver sell off. Why? Because the market has been obsessed with this belief that if there's high inflation, it means the Federal Reserve and the other central banks around the world are going to work to lower that inflation in the future. And therefore, in this mixed up world that we live in over the last half a year or so, high inflation has been equal to low inflation in the eyes of the market. And conversely, low inflation has been taken to mean high inflation. Well, we are seeing a change here just over the last 2 days. Now, this is the chart from yesterday on the 13th. I want to show this to emphasize it. This is the spot gold price. Look at this sell-off. So when that news came out, 8:30 a.m. Eastern time, that CPI inflation report, look at the initial sell-off here in gold. Gold collapsed almost $20 in the matter of a few moments as some of those investors or traders or nefarious entities figure out the blank, fill in the blank. It really ultimately doesn't matter. We want to focus on the price action of the market as a sum. Those traders came in and believed that myth once again, and they said, high inflation, highest inflation in 30 years, let's sell gold. And then what happened? A new group of buyers came in and bought that gold that those scaredy cats sold. And not only that, they brought it all the way, not to where it was, but $20 higher than where it was right before that CPI report. This is a huge change in the psychology of the precious metals markets. Huge change. Wasn't just gold. Look at silver. Exactly the same thing for silver. The CPI inflation report is released. Silver has a mini freak out. New buyers come in and say, we're going to use that as an opportunity to buy. So what's the big change here is that starting yesterday, and by the way, if we were to extend these charts till today, there was nice follow through today in the precious metals markets. Yesterday, we saw the market start to say, hey, high inflation might actually mean high inflation. High inflation might actually mean higher inflation to come. So we need inflation protection now. Huge change. So what I want to do is go back and, it's been a few months here since we've looked at this gold chart here in YouTube. So let's pull up the key. Remember, all these flashy lines, all the colors have meanings to them. Pause the video if you need to really make sense of this, but I will address a few of the lines here where we are. So, functionally, where is gold? 10-year bull market. 10-year consolidation right below or in the vicinity of the former all-time peak. So technically speaking, we're in a consolidation after a 10-year backing and filling process here, taking this cup shape. So let's zoom it in now to the structure. When I say the structure, I'm talking about the most recent significant low that forms any sort of trend structure. And so here you can see the lows from 2018 matching up very nicely with some of the lows from 2019. This is going to be the structure, the most recent 3 years here that we're focusing on for the short run there. So you can see clear trend, clear trend, clear trend. Now, it's funny how markets sometimes get away from trends, but then they tend to come back into the vicinity of those former trends. So here we're looking at gold 2018 through the present now, the zoomed in chart. Now, the form of technical analysis that we do here, that I have arrived at a system over the course of studying technical analysis for the last 20 years that is not 100% perfect. In fact, no system of technical analysis is perfect. However, it is the most clear system that I have ever seen, and it stacks the odds in our favor over time. If we come up with a disciplined system and we stick with it, we can stack the odds in our favor. So when you see a gold market like this, okay, so you had a more steep channel here from some of the lows in 2019. These are turquoise lines. These are broken trends. Look at this, another broken trend from the low in March in 2021. And notice how once you break a trend there, notice how the market broke the trend lower, came right back up to what? Retest that broken trend, and then failed again, has been consolidating. So it's critically important that we study not only broken trends, but still valid trends. You can see the lower declining support here still being respected on multiple occasions, et cetera, et cetera. Valid trends, broken trends, valid horizontal support levels. You can't tell me it's random. Look at the number of times. 1, 2, 3, 4, 5, 6 times that gold has bounced in this area just above 1650, right? Nothing random about that. Once again, doesn't mean we can predict the market with 100% accuracy, but we absolutely can stack the odds in our favor. That's what we're trying to do over and over again. So where does this leave us with gold? When you just look at the gold chart alone, we've broken a rather steep wedge here. That's not all that significant in the grand scheme of things. It leaves gold in somewhat of a range. You can see the most recent resistance here at 1835. Look at 1, 2, 3, 4 hits there at 1835. That's the intermediate term resistance that we need to focus on in black. And what else? We are above this horizontal support and the rising support, both of which are merging here. You can see where my mouse is, the merging of the black and the blue in late 2021, right around the new year. So given that, when we're in this type of a situation for gold, what I like to do is draw a little shading area. This is the intermediate term expectation when you look at gold by itself. Even with the bullish price action that we've seen yesterday, I still do not have enough evidence to tell you that this resistance here at 1835 is going to break. And I don't have enough evidence to tell you that this support here around 1650 is going to break. So therefore, the deduced logical conclusion is that you are in a slightly upward slanted consolidation here with an amplitude of about a little less than $200 for the next year, plus or minus. This is the general expectation for gold. And we take this market one step at a time. When we break the 1835 resistance, we then talk about what is the next logical resistance up here at 1920, right? From this peak right back there earlier this year. So I take the markets in chunks. Now I can give long-term forecasts and long-term price targets, but those are long-term. I will tell you that when we take out this high, a price target for gold is going to be $2,800. But that could be 2-3 years off into the future after we take this out. When we're looking at the intermediate term chart, we take the chart one step at a time, and this gives us the logical shaded target call out that you have at this time. Nothing more, nothing less. So, hey, generally I'm comfortable with this. You could say slightly, perhaps this will still be a slightly boring market until we take out 1835. We'll take it from there. We'll take it when we get there. Now, as I said, this is the gold chart in isolation. We have this shaded until one of these support or resistance levels is broken. Now, one of the major benefits of being a precious metals investor is that we do not only have the prices of the physical metals to evaluate. We are able to look at other related aspects to these markets and therefore draw conclusions for B based on A, or draw conclusions for C based on B, which is based on A, in a domino chain of analysis. So in this instance, what I want to do is bring up the large cap, the senior gold miners. There absolutely is a relationship between the companies that are mining for the metal and the very metal that they in fact mine for. So I like whether or not you are going to invest in the gold mining companies or physical gold itself or physical silver itself or the silver mining companies. It is incumbent upon you to follow all aspects of this market. There is no other way. Even if you say I'm a stacker, I don't care what happens to the price. Eventually you're going to care what happens to the price. So let's focus on as many aspects of this market as we can. Now, this is a mostly blank chart. We do have the Fibonacci retracement levels drawn in here. We're looking at the senior gold miners going back for the last year and a half. Critical chart that we're looking at here. Notice the black support here dating back to this peak in early 2019. This is right before the coronavirus panic recovery. Notice support, 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 support. You get it? Support. What is this? It looks like we had broken this support just back in September. Aha. We'll talk about this in a moment. First of all, let's draw on a few of the other trends that we should pay attention to. Very clear broken downtrend here. You can see the number of hits. This is a best fit line on the absolute highs. Broken. We've stayed above the broken trend, even though it's continued to drift lower, above the broken trend. This is classical in technical work. And what else do we have here? A very clear, you cannot tell me that this is random. We reject the random walk hypothesis of financial markets here in this service, and I suggest that you reject it as well as an investor. If you're trying to tell me that it's random, that these 4 data points line up precisely along a single line, then you would have to believe that other aspects of human behavior are random. All we're doing here in these charts is plotting human behavior on a graph. You could do that in another way. You could plot the time that you sleep on a graph. Are you telling me that would be random? Yeah, it might vary a little bit from night to night. But generally speaking, you're going to observe some patterns in that aspect of human behavior. You could plot out, how many calories do you eat in a day? Yes, it's going to vary certain days, plus or minus. Did you exercise a little bit more one day? Did you sleep most of the day? Maybe you don't need as much food that day. Is it cold out? Okay, there's some variability. But you know that your behavior and consumption is going to stay within a, generally speaking, certain pattern that could be plotted on a graph. All we're doing here is plotting on a graph an aspect of human behavior that we call the gold mining complex. When you see a very clear pattern that suddenly changes, this is a usable data point. What is the previous thing that had been going on? A downward trend with a break of a 1.5 year support level to boot. Super critical that we're seeing this here. So you have a very bearish signal, the break of this horizontal support, which all of a sudden, within the matter of a couple days here, not only breaks the downtrend, but recovers the upper boundary. It's always the upper boundary of these support levels that we need to pay attention to. Recovers the upper boundary of this. This is huge because this starts to stack the odds that what we just saw back here in September was a false, not a true breakdown of a 1.5 year support, but a false breakdown. And guys, you know when the last time is that we've seen a false breakdown in the GDX on this kind of a scale after a 1.5 year consolidation? It was back in late 2015, right at that major bottom in gold and silver after a 5-year bear market. And after we saw that false breakdown, these gold miners basically shot straight higher for 6 months. Now, there's nothing guaranteeing that this will happen again in exactly the same manner. And in fact, I'm sure it will not, because markets don't tend to do the exact same thing every single time. The previous false breakdown was all the way down at that level back in 2015. So you're somewhat higher. However, the model is still the same. The interpretation of human behavior here is that there was no logical reason for the gold miners to be trading so weakly other than what? Investor apathy, investor frustration. People were getting tired and sick of the precious metals, and those traders who were selling gold on the high inflation were causing everyone to doubt the thesis. And so you just had the investors sell. And so what we're interpreting here, comparing that to the 2015 example, is that when you see those false breakdowns, that tends to be a very good signal of capitulation. The end of a major downtrend is what appears to be shaping up here. Appears to be shaping up. And so after a false breakdown, break of a downtrend, recovery of the upper boundary of this year and a half former support zone here, what we would expect is something like this, perhaps a little continuation up here toward the level around this peak, or the 38.2 fib retracement level. Perhaps a little bit of a backing off again, back down toward the support level around 32, maybe matching this low, maybe coming into the little confluence of support here. And then a rounding up of this market. The next logical level is coming up here to 40, perhaps a bit of a back off from 40, and then boom. The big takeaway point here is false breakdown after a year and 3 month downward series of trends tends to be one of the most bullish reversal signals that can be seen in the financial markets. So whether you're talking about whether you want to invest in some of the gold miners or gold itself, you better believe this signal here is important to the entirety of the sector, including silver and the silver miners too. So in our service here, we, over the last couple of days, have just bought some new gold mining positions because I think this is as good of a signal as we could ask for. So if you want to learn more about what we are doing here, which gold miners we are buying and selling, make sure to check out either of our 2 subscription services that I will talk about later on in this video. One way or another, this is a really good looking signal for the entire sector. Let's go back to gold. Okay, so we talked about that we have taking gold itself, gold in isolation, which is important to do. It's important to evaluate things first in isolation. And then you get the deduction. Then you see what's happening to the gold miners, that they're breaking out after a false breakdown. And you start to say, okay, wait a minute. If A leads to B, it's starting to look like we throw out that scenario and we stick with the first scenario here. And if that is the case, it doesn't mean that gold needs to break 1835 tomorrow, although it could. But if this is coming, let's say, before the end of the year, we then start to talk about how this market is shaping up for a bullish resolution to this year and a half consolidation. And it would look something like this. You would get the initial pop, which would take us back into the vicinity of this peak, 1920, plus or minus a few dollars. Back off from there, retest the support at 1835, and then blast higher. And remember what I said, when we break that all-time high, we have a target of $2,800 that will be outstanding at that point. Target doesn't have to mean a final level, but it's a first intermediate level that we will look for. So guys, you take this in sum, you have the gold market itself having a nice couple days on the reversal, right? Remember the inflation statistics, highest inflation in 30 years. You saw some of those irrational sellers show up once again and say, we're going to sell our gold on the high inflation. And they were proven wrong this time. A new group of buyers showed up. This is a critical change in the long-term trajectory of this market. If you think inflation is going to be getting worse over the next year or two, then we're seeing the evidence in front of our eyes that gold and precious metals are about to start responding. And when something goes from being as unloved as gold has been for the last year and a half here, you could have quite a mean reversion in psychology start to come into the market here. You look at that, you look at, okay, so gold itself still in a neutral consolidation. However, gold miners breaking the downtrend, recovering the support, looking like a false breakdown. This is as good of a setup as you could ask for. My fear is that most people are going to wait until gold is $200 or $300 higher and do what they did last year, which is to chase the market once it's already higher. And then people buy at a short-term peak. Market reverses on them for a little while. They get scared. They sell. Don't do that. Follow the market now when it's still closer to the lows. And things are, however, giving us good-looking signals. I want to tell you about the new service that we have just launched. It is called Elite Private Placements. This is for higher net worth investors. In this service, we negotiate, myself and other industry insiders, we negotiate with gold and silver mining companies directly on your behalf. I invest personally in each one of these deals. And the reason that we do this negotiation is because we can receive better terms for the same gold mining company that, let's say, you could buy in the open market at $1 per share. Sometimes we are able to negotiate with these companies to buy shares at, let's say, 95 cents or 90 cents, giving you something like a 5 or a 10 or sometimes even a 20% instant profit. The other thing that we get with this type of investment is free warrants. If you don't know what warrants are, I'm not going to describe them right now. I will dedicate an entire video to this in the future to explain to you what we're doing. Guys, this is the evolution of my own career as an investor. This is 8 times out of 10. This is how I want to invest by these private placements because we are able to get such favorable terms that it pales in comparison to buying shares in the open market. You have to have a certain level of capital, though, to do this. Otherwise, it is not appropriate for someone's risk to reward tolerance. And once again, I cannot tell you what to do. I publish the exact investments and the exact trades that we are making here, and it's up to you to make the final determination as to whether or not you will join us in this journey. This also includes a free subscription to what? Precious Metals Intelligence. This was our former flagship service. This is a service for the general precious metals investor. It covers weekly videos like you're seeing now, but not only covering gold and the gold miners, but also covering silver, the US dollar, the US stock market, which may be setting up for a short trade here, the rest of the commodity sector, as well as the exact open market gold and silver miners that we are investing in here. So you receive those alerts in real time when we're buying or selling any of the gold miners, and you also receive our latest thoughts on gold, the US dollar, and the stock market going to your inbox every single week. If all of this is too much, you're not sure which one is correct for you, maybe you have a unique situation, maybe you're just starting in the precious metals, or maybe you're looking to move $5 or $10 million into the precious metals. I work with individuals such as yourself by voice or email consultations. Generally, voice is more efficient for both of our times. We can cover a lot more. However, if you'd like to consult by email, that is an option as well. And this is, again, I do not sell the precious metals. I do not take any fees from any of the companies that we are negotiating with here or the companies that we are buying. I look out for the best interests of individual investors. And you get a researched, independent perspective from someone who's been inside and following and negotiating in this market for the last 20 years. So I'm glad to have you guys back here. These signals that we are seeing, you talk about that highest inflation in 30 some odd years. that was sold initially, those, but I'm just going to call them idiotic sellers coming in there and selling gold on the highest inflation in 30 years, come on. It looks like they have finally been proven wrong. Remember, this is about your sovereignty in the same way that I care about freedom from war, freedom from oppression, freedom from medical oppression. I care about sovereignty and your sovereignty as a human being. The financial standpoint of that, the financial component, is an important aspect of that. It's not everything, but it is one very important aspect. You get your resources together, you make some wise investments here when a sector is out of favor, and it opens your life up to possibilities that you could not previously consider. Much more on all these topics over the weeks and months ahead. For right now, I'm glad to have you here. I'll see you over the weeks coming.